Good morning, good afternoon, good evening. Welcome back for another video. As always, a free way you can support the channel. Hit that like button, subscribe to the channel, leave a comment in the comment section. Today, I'm going to focus on the FOMC meeting and its meaning for stocks and cryptos. But to start out, hey, I just want to recommend you just check out. I'm not saying buy an NFT, mint an NFT. Check out cryptoblocksnft.com. I was talking with their team. They gave me a free NFT, no strings attached. I never promised anything when they offered me an NFT. But, reading through their roadmap, going on their Discord, seeing the NFTs, it kind of gives you a Lego movie feel. It just seems like it has potential for NFT projects. That's all I'm going to say about that. Let's go ahead and dive on in. So, first of all, Bitcoin, Ethereum, the cryptocurrency market, nice bounce. It is good. This is, and I would even say a more significant bounce than we've seen over the last, since November 10th, the $69,000 peak. That's a good sign. But one thing that I'm really paying attention to, I said this on my channel yesterday, is that there is a channel, there's an easily drawable channel that you could look at and see, like, all right, have we broken out of this? Will we break out of it? And I want to see a confirmed break out of that channel before turning bullish. A break out of the channel, holding that as support, and then moving higher. And so we're not there yet. And I'll show you that on this chart here. You can zoom in a little bit. We're not there. We've just been within this channel. So what would it take for us to break out? Let's say we broke out on January 29th. That would be around $40,000 Bitcoin. Until then, we're still within this descending channel. And yeah, will we break out? Yeah, we will break out at some point. But until then, we could see a lower high, lower lows. I want to go beyond a period of lower highs and lower lows and start seeing higher highs. And to me, that will confirm a trend reversal. And that's when I'll buy. Now, I did say yesterday that $33,000 does seem like it's a good level of support. But again, if we break through that level and we go lower, and especially if we break through $30,000 to the downside and we see a weekly close below there, watch out, because it's pretty much air between $30,000 and $20,000. I think the 30s are going to hold. I very strongly think that, but it's one of those. It's on my radar. It's on my radar, and maybe there's a mentality where it's just like, let's just go ahead and get this over with, go to the 200-week moving average, and which is at $19,232 as of today, and hit the bear market bottom or around there, and can start with a new move up. One disclaimer, one thing that I very clearly want to say, I said this yesterday, no matter what happens over the next few weeks, even months, I'm convinced that $69,000 wasn't the top. We could go to $18,000. I will still believe that $69,000 wasn't the top of this cycle, but we're not going to $18,000. We're most likely, very, very likely not going to $18,000. That's insane. I mean, especially given the amount, just when people see Bitcoin in the 20s, we literally spent hours there over that miserable mini bear market during the summer. So anyway, taking a look at the FOMC meeting, it's fascinating because, there's people saying that this is the most important FOMC meeting of all time. I'm not willing to go there. Every month there's an FOMC meeting, and people always put way too much weight on what the Fed is going to do. And so, but this time period is unique, dare I say, in United States history. And, especially over the last 40 years, they started lowering rates about 40 years ago. And it's just been this constant lowering and lowering, trying to raise, but then seeing, the 1987 crash and lowering. And then the dot-com crash, and then lowering, and then the 2008 financial crisis, et cetera, et cetera. And they've been consistently lowering rates for 40 years now. But now we have this issue where the Fed is stuck between a rock and a hard place. Because whenever they raised rates or tried to raise rates, and then they see that this house of cards is collapsing, it's like they didn't have to worry. Runaway inflation, at least according to CPI numbers, wasn't that big of a concern. But right now, runaway inflation is a huge concern with them. So they have to choose between a recession, a full-blown recession, and runaway inflation. They will get one or the other. So what are they going to choose? That's the question. Let's take here's a picture of what is ahead of us, what could be ahead of us if the Fed doesn't reverse, which I'm telling you guys, I've been saying this for months now. The Fed will reverse in 2022. But does that mean they're going to reverse today? No. Does that mean they're going to reverse in March or in June? That doesn't mean that. But at some point, the pressure is going to be too tight, and they are going to choose to lower rates again, or to they have the plan. What's priced in the market right now is 4 rate raises: once in March, once in June, once in September, and once in December. I would say it is about less than a 10% chance, maybe even lower than that they're going to raise rates all 4 times. And they were going to raise it, 0.25%. Because especially look at this. I mean, here's the S&P 500. Since the COVID crash, you could draw just, peaks and valleys, higher highs, higher lows. That's essentially the name of the game here. Higher highs, higher lows, but then boom, starting in January, beginning of the year, we stopped putting in higher highs and higher lows as this looming threat of rate raises is hanging over us. And so look at how the market has reacted. And this is what I mean when I say this is a house of cards. This economy is being propped up by insanity. And for me, if I'm thinking 20, 50 years in advance, I would just want the house of cards to collapse, because 20 and 50 years from now, we will be in a much, much healthier position. But Biden's going to get railed if that happens. And whoever is sitting in as president is going to get hammered. And so I don't think any president's going to allow something like that to happen. And at some point, Biden is going to put pressure on the Fed. I don't care about inflation anymore. We've got to prevent a recession from happening. And so all this action, all this craziness is just the word of the Fed saying, hey, we're gonna lower rates, or we're gonna raise rates. And so here's the S&P 500, and here's the NASDAQ. I mean, the NASDAQ is looking so much worse. So what happens today? It's like, I think some people are placing their hope in today being a day when the Fed is going to reverse their stance. And I don't see a reason why they would just yet. I mean, this is a reason for sure. The NASDAQ, the S&P, the Dow, this is a reason. But man, the optics of if the Fed just straight up said, like, yeah, we're not raising rates. We're reversing course today. Oh my goodness, no way. Goodbye DXY. I mean, if they do, it's just flat out reverse today, then get out your rocket emojis. We're going to have an epic melt up, and probably then after that, a crash at some point. But all right, 3 scenarios from least likely to most likely. So least likely, the Fed does a complete reversal. I think that's very unlikely for today, and I think that's unlikely for February. What I could see happening is sometime in March. That's when the first rate increase is potentially scheduled. March is when people are expecting the Fed to raise rates. So maybe in March, the Fed would come out and say something like, you know what, not yet. We're going to delay it a little bit. And so that would be more likely to me. And so, and that's the second scenario as well. The Fed just delays rate hikes. They come out today and say, yeah, we're planning on raising rates, but just we don't have a timeline for that. We're going to temporarily halt raising rates. I could see that happening because especially with government anything, the way to make something permanent is to make it temporary first. Okay, that's just what they do. You know, the gold standard or 1971, Richard Nixon. We are going to temporarily put an end to pricing gold at $35 an ounce. Temporarily, and it's been 50 years and it's still not, I guess it's still temporary, but it hasn't been reversed yet. It's never going to be reversed. So, all right, the Fed's going to temporarily delay rate hikes. But I think for today, the most likely scenario is that nothing is status quo. Nothing significant happens at this Fed meeting. And that is my guess. And so what happens with the markets, if that's the case, I would be a little bit nervous about Bitcoin. I would not recommend buying. Well, it's one of these things. I mean, if those least likely scenarios happened, this is a great time to buy Bitcoin or any other cryptocurrency. But in my opinion, most likely they're going to hold for now. They're not going to do anything drastic for now. But maybe in February, more likely in March, they would do something like, oh, we're going to temporarily raise rates. NASDAQ, but you know, the thing that would prevent me from going all in with that idea that they're going to hold is, I mean, look at this. What happens with the NASDAQ if they just simply say, yeah, we're going to go along as planned? What happens with the S&P? We're going to go along as planned. A month, you know, give it a month, another month of the Fed saying, hey, we're going to go along as planned. I mean, that's a pretty heavy dump right there. Where are we in a month? $4,000 S&P peaked at, a little under $5,000, 4,000, not 3,500, but 3,800, something like that. NASDAQ peaked at 16,000, above 16,000. Now it's at 13,473. Look out below, man. Look out below. So we'll see. I just think inflation is the bigger threat right now in their minds, and especially in Joe Biden's mind, in the White House's mind, whoever is running this country. Inflation is a bigger threat. They don't yet feel the pressure and the pain of lobbyists, of whoever else, of corporate interests coming down on them and breathing down their necks, but they certainly feel the pressure still of getting inflation under control. But at some point, there's a reverse. There's no way. I mean, if they're going to continue like this, how low do we go? I don't know. We'll see. So that is all I have for today. Today is going to be an interesting day. And, hey, if any of those least likely scenarios happen, it's like, here we go, off to the races. So we'll see. We'll see what the Fed does. But in my opinion, status quo for now. So I hope you have a great day, great rest of your week. I will certainly see you in another video. Peace.